back, guys, to MMG. So in this video I'm just going to do a freestyle. I don't feel like preparing videos. Take like hours. So let's talk about the markets, the news, and everything. First of all, consult your financial advisor. I'm not your licensed financial advisor. This is more of an educational channel and listening to me rant and give you guys my opinions. I could be completely wrong. Of course, I'm never going to be always right. Stocks are extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. And have your emotions out. Have your emotions out and stops in place. And do not invest in anything you're not willing to lose or lose sleep over. All right. So, a lot happens every day. It's, of course, the news cycle, it keeps quickening, and that's because of the times that we are in. We're in the times of extremely large macro geopolitical everything change, right? And I did not make a video about the last FOMC, which was Wednesday. I mean, it was pretty much what I said it was going to be. It was a 25 basis point rate cut, and Jerome Powell mumbling and counter and counter arguing himself. So what can we talk about? I prepared a lot of news events. What did I want to talk about? Here we go. Type in MMGinvest. Go to my website. You'll get 15% off. See all my videos pop up. Then you go to the first website right here. Then you watch the video that's on my website so you know what to expect and get. Watch this video. And you'll get a free stock that I talk about. And then join the private group. A lot of people don't join. Half the people, or 40%, don't join the private group. But it's only $10 a month. And then I have like, by the end of this weekend, I'll have like 30 or more stocks that we're looking at. And I provide information, my opinions on. So it's 15% off this price. All right. So what's going on? I'm looking at something new. Prospect generators. Extremely risky, but you know, if you throw like a very small amount of money into like maybe 10 of them, maybe one or two are gonna go up like, who knows, 1,000, 10,000% or something in the next 3 to 5 years, assuming that gold and silver go into a raging bull market, right? So that's exciting. One of the guys brought it up to my attention. I've heard of these. I just never really looked at them. I thought they were really risky, but you know, as of late, the prices have been going up on gold and silver like crazy, and the stocks are starting to move. Just so you guys know, you're not late to buying gold and silver stocks if you plan on cashing out at the all-time highs in the next 3 to 5 years. Like, the party really hasn't started on the mining stocks. The mining stocks haven't gone up considering the price of gold and silver. If one of the guys made this chart, this is what I'm thinking. If the price continues to go up on gold and silver, right? This is gold. And it just goes up, major mining stocks are going to start going up in value because that's the first place Wall Street money starts going. And then the speculators jump on board and they start buying the junior miners. And then once the price really gets up there, like 1,600 or 1,560 even, or 1,580, then you're going to start seeing the small cap, the explorers starting to rally as well. And I wrote a little thing about that. Also, if we go to a gold chart, let me explain something to you guys. I was in the gold rally during 2016, and my mining stocks did really, really well, and I made a lot. And let me zoom out here. Let's go to a weekly. Here's a weekly chart of gold. Let me take some of this stuff off here. So back here in 2016, you see this right here? See that? This rally in 2016, it only went to 1,380. And the gold and silver mining stocks went up in value and rallied more than they just have recently. The prices of the shares of not all of them, but most of the gold and silver mining stocks were higher then than they are right now. So there's a lot to make up for percentage wise. And here's what's going to make me mad. All right. A lot of people who watch me, I mean, a lot of people have joined the private group and bought my report, but majority of people watching me haven't. And they're going to FOMO buy later. And they're going to miss out the most profitable part of the move in the mining stocks. You have to understand, if you accumulate now, or if you started accumulating a year ago, you are up by a lot. And that's because your money goes longer. The value of your money goes longer, meaning it's the equivalent of buying a Bitcoin when it was below $100 versus buying a Bitcoin when it was $1,000. So your money bought you a lot more Bitcoin when it was like $10 versus buying it when it's already at 1,000, and then Bitcoin goes to 20,000. It's the difference between a 20x and a 2,000x or a 20,000x return. Not x. I mean, it's between a 200x and a 20,000% return. That's how you get the life-changing results and gains. It's not waiting for the mining company's shares to start going up another few 100%, because you're not going to be able to buy as much. It's still, I mean, even if you buy it probably later, you're going to do decently, but it's not going to be like massive amounts of gains. And right now, the mining stocks are still relatively close to their lows. They're not quite there, but they're close. Not all of them. Some of them have already been doing really, really great and exploding in price, but most of them haven't. So, but that door, the opportunity, it's closing. It's closing quick, especially since the price broke back above 1,500 on gold. All of the mining stocks started rallying. Average hourly earnings. It pretty much, forecast was 3%, so in actual was 3%. Average hourly earnings, that doesn't matter. Average weekly hours was the same as expected and as the last month. Government payrolls was actually lower, which is actually a positive. That is a positive. You don't want more government jobs because they don't add to the economy. They only take. Manufacturing payrolls. This is what's really bad. Last month, it was negative 5,000. It was forecasted to be negative 50,000, but it was only negative 36,000. And that's why it's green, which is ridiculous. It's still really, really bad. Just because they forecasted it to be worse, that doesn't mean that 36 is good. No, it's just really bad. 128,000 non-farm payroll. Forecast was 89, so it beat it, but it's still worse than last month. So the payrolls are actually falling. Participation rate, well, it was forecasted at 63. That's what we got. Private non-farm payrolls. This is what matters, the private sector. Forecast was 80,000, but we beat that estimate for 131. Last month was 167, so it's actually falling though. U6 unemployment is at 7%, which is much higher, but that's what they put it at. Unemployment rate pretty much was forecast, but it is ticking a little bit higher. What else is important? Manufacturing PMI. This is bad. I mean, 51. It's just as worse as last month. Construction spending. So it ticked a little higher. ISM manufacturing employment, it beat estimates, but it's not that, it hasn't changed all that much. New orders, they're a little bit up, but it is the holiday season. It should be a little bit higher. Manufacturing PMI, it's falling, not good. So overall economic data is still pretty horrible, and it looks like it's weakening, especially going into a holiday season. Although, I mean, these numbers are from Q3, so Q3 was weak overall. And you have to remember, these numbers can be adjusted for the next year. So these numbers we see now, they might be significantly worse than what they are reporting today. And I don't trust them personally. All right, some news. There's a lot of news to talk about. I'm just going to slightly cover them, brush over them, because I don't want to repeat myself too much. So, 8 signs of excess in the market. If you follow me on Twitter and Instagram, I talked about this a few times. And yeah, there's definitely excess in the market when corporations keep buying their own stocks and their revenues and profits are dropping, right? The best stock market ever heads into stocks. Best time ever. Okay. S&P 500 are guaranteed to rise at least another 5% in the next 2 months. Nothing's guaranteed, and we'll see. 5%. And that's a lot because the market cap now is enormous for the stock market because, I mean, we just hit all-time highs today. Stocks follow the Fed to notch record highs. All right, so people, I've said this a few times, when the economic data is bad and it's worsening, why does the stock market go higher? It's because everyone's anticipating the Fed's going to keep capitulating and lowering rates more and more and eventually just print trillions of dollars. And it's all going to get pumped into the stock market, which is stupid. Even if you're betting on that, that's an admission at how bad things really are. And it's pretty much, it means that the stock market is a greater fool theory market, which means it's a bubble, and it also means that it's a Ponzi, right? You're not buying because you believe in what you're buying and you actually believe these companies are going to do better in the future. You're buying because everyone else is buying and you're hoping there's always a bigger fool to buy from you later on. That means that the bottom could drop out at any given moment. When momentum stocks can't live up to their name. Yeah, like Tesla. How to bet on China. I would not bet on China. So, I'm just reading these. Treasury yields climb after U.S. jobs report, but notch biggest weekly slide in a month. So, yields are going to drop back down, I think, because the Fed's going to push them down. But then once the stock market cracks, they're not going to be able to stop the yields from shooting up, and that's what's really going to blow up everything. And the bond market will blow up. And when that happens, I don't know, guys. I don't know. It's going to be scary. And I don't know when that's going to happen. I really don't. Gold ends off 5-week high, but tallies weekly gain in a period focused on jobs and Fed. All right, so let's move to the next big news. Gold stocks surged to post-Powell highs after ISM miss. Endless jawboning. Right. I mean, I anticipated this in my last video. I warned you guys. For the past 2 weeks, I've been bullish, and I bought in 2 weeks ago, right at the bottom of gold, which was at 1480 or something. And I swing trade the leverage ETFs. I literally bought them on the bottom of the pullback, and they're doing sweet. Like one of the best trades ever for the private group. All right, well, let's go to the next one. Financial markets to Federal Reserve. Is that all you've got? So the markets, they are making new all-time highs, but not substantially. I mean, in the 10-year treasury, I and by the way, right now, gold is going up despite the fact that the 10-year is going up. And I'm expecting actually the 10-year to dip again. And when that happens, metals should rise next week and the week after substantially, I'm hoping. I'll do a pre-market Sunday. But yeah, I don't want to get too in depth about that. Still think there's no inflation. Check out all the affluent renters. Yeah, so this chart right here, it shows that the percentage change in household ownership status since 1980. There's more and more renters, and owners are I mean, it's still slightly going up, but it's nothing near the amount of renters going up. It's because people can't afford homes, and that's inflation, guys. Inflation, it doesn't always go into food. It doesn't always go into you know, gas prices. It shows up in the stock market, the bond market, home values keep going up, and I've showed a really good video for the people in the free newsroom about there's this nice short video about this guy who used to flip homes back in the mortgage-backed security crisis era, back in 2000, 5, 6, 7, 8. He went to Ontario, went to San Francisco, went to California. Guys, they're like selling dumps for like 1.5 million in Canada. It's insane. I mean, it's absolutely insane. Same thing goes in San Francisco and Cali. So people are getting priced out. Now, most of the U.S. isn't in a bubble, but it's just certain sectors. But there is a housing bubble, especially in Australia. All that hot Chinese money, it's in Australia, New Zealand, England, or UK, and Japan, and Canada, and the U.S. That's where all that hot Chinese money went from China's economic explosion in the past decade. The Fed's insurance rate cuts didn't work. Now for the emergency cuts. Yeah, so the Fed's really, really boxed themselves in here. If the market doesn't keep rallying and making newer highs, and it falls back below, and I'll look at the charts for a second, the Fed has to keep this going, and it just takes more easing and easing. That's probably another reason why they're in the repo market and their balance sheet keeps exploding. So there's a lot of things that are boxing the Fed into having to do emergency rate cuts. One is U.S. manufacturing survey contracts to worst level in a decade. In the past 10 years. That includes 2009. U.S. gross national debt jumps by 1.2 trillion to 23 trillion technically. Growth hits the wall. Student loan debt soars, totaling 1.6 trillion in 2019, and it'll probably be 1.7 pretty soon with all the interest on it. That's another reason why the Fed needs to keep interest rates low, because if they go higher, all the millennials, I mean, they're just going to stop paying their student debt. I mean, most of them already have, but then they're just going to drown. There's a good reason to fear the repo market. I talked about that last video, I'm pretty sure. Midwest faltering economies will spread pain nationwide. Treasury yields sink after U.S. manufacturing weaknesses raises recession fears. Right. So as the 10-year and the 30-year they drop, the yield on them, the yield curve starts flattening again. And if the short-term interest rate spikes, but the longer-term interest rates fall, we'll get another inverted yield curve like we did a few months ago. And that's going to spook the markets. Venture capitalists, veterans host emergency meeting of unicorns as the IPO bubble implodes. Again, the IPO bubble has imploded. Another sign of, weakness for the markets, that the euphoria phase should be over. But it's really weird as the stock market keeps going higher, yet earnings aren't really all that great that have been coming out as of late. The Fed's liquidity response is too little too late, but that was always the plan. So this is a good article. I'm not going to read it, but I'll post it in the free newsroom. Links below this video in the description section with a bunch of other links you guys should read. So this is about the elite and their plans. It's another reason why I don't want to read it. I'll post this in the newsroom. I promise I won't forget. All right. Millennials with student debt are getting crushed the most in these 10 cities. So that's up in Washington. Let's just read this. Number 1 is Gainesville, Florida. Corvallis, Oregon. Durham, Chapel Hill, North Connecticut. Morgantown, West Virginia. Eugene, Oregon. Greenville, North Carolina. Ithaca, New York. Santa Fe, Massachusetts, and Columbia. I don't know why. You guys can read this on your own. I don't want to spend too much, guys. Just brushing over the news. Global anxiety soars. China's military might roars, Japan says. So this is a funny video. I can't play it because of the music on it, but I posted on my Twitter and Instagram in the newsroom. But yeah, guys, if you don't think that China plans on being the next world superpower and hasn't set itself up to be, China may suffer in this next global recession, depression, hyperinflationary, financial, global collapse, whatever. They're going to suffer, but they're more likely to recover because of their manufacturing base. And the fact that, they are commies, but at the same time, they're smart commies. They have no regulations and no taxes on their corporations and companies. And that's technically more free market than the US and Europe. Economically. Not liberties, though. Liberties, you're like, slave. Total US debt surpasses $23 trillion for the first time. So I posted this in the newsroom. Schiff posted this. I just noticed that the national debt surpassed $23 trillion yesterday. Too bad no one in Washington noticed either. Trump added more than $3 trillion to the national debt under 3 years. 3 years, $3 trillion. None of the Dems debates even address the topic. A crisis is coming. And why is he saying a crisis is coming? It's because no one's even calling him out on the fact. And the Dems probably plan on spending even more. And the fact that they're not calling him out on it is probably because they do talk, all right? And they're probably really scared on the Hill. Because, guys, $3 trillion. I think if you stack $1 trillion, or is it $20 trillion, in 100s, if you stack them on top of each other, it'll actually reach the moon in distance. To give you guys another perspective of how much money that really is. Yes, the economy's around like 19 trillion, but if it's a bubble, it's really probably a lot smaller. I'm just guessing off the top of my head, the U.S. economy, if you take away all the financialization, all the bubbles, and all of the worthless paper shuffling jobs and service sector jobs, all the stuff, all the fat, all the government spending, if you cut off all the fat that doesn't produce and doesn't add to the economy, the GDP is probably like, I don't know, it's less than 10 trillion. It's probably like 6, or maybe even less. because the manufacturing base is getting gutted. It's probably the manufacturing base at this point. Percentile of GDP is probably less than 10% itself. So, also, if you, a lot of people say there's going to be a gold standard. You guys have to understand, the U.S. can't go back to a gold standard. There's a reason why Nixon took us off in 1971. It's because France wanted to trade all the U.S. debt, right, bonds and dollars, for metals, and we couldn't pay them. Now, if you have a trade deficit, what happens is all the metals will get sucked out of the nation, and then once that's done, it's, I don't know, it's Zimbabwe. It's, you know, you know. What else? The food pyramid, this is the real food pyramid. There's some hardcore push propaganda. You know, I don't want to get into it. But listen, guys, this is how I've been eating. But I don't even eat healthy, like, probably 30% of the time. I cheat like 2-3 times. I eat like probably 4 pizzas a week, but I work out so much it doesn't even matter. But I get thin crust. I do cut back on carbs. I don't eat a lot of carbs. But listen, they're like lately really pushing for like eating plant meats and eating bugs. And that's just another agenda. And, you know, what is the, I don't want to say these words in order because the get algos. 2030. Look it up. I'll post it in the newsroom. So, U.S. total federal debt since Trump election exploded. And it's because he has to keep the Ponzi going. That's all it is, guys. I mean, he's the king of debt, and I think his plan is to just spend, and then just default and tell everyone to go F off. Which is hilarious. Which is probably the best thing you can do. That's what I would do if I was him. I'd spend the dollars while they're worth something. At least try to get the manufacturing back. Because the thing is, if he does the right thing, which is make the Fed raise interest rates, then the economy implodes without a manufacturing industry infrastructure, and then I don't know. It's like the zombie apocalypse. You guys can see that chart. I mean, everything's just exploding. I mean, everything's just exploding. I'll post this in the newsroom as well. Promise, this time I'll do it because I'll keep the windows open. I'll paste and copy them into the newsroom. So here's the debt held by the public, and this is when they rise. So you can see here, Civil War, World Wars, Great Depression. And right now it's almost at WW2 levels. And it's projected by like 2030 to just balloon, explode. I mean, all those entitlements, there's no way we could pay them. And that's just that. As the dollar loses value, you're gonna max out your credit cards just to live, if you haven't already. Because the cost of living is just going to keep going higher. And people who have homes, who have new cars, this and that, who have assets, to maintain your assets, to fix your home, to keep everything running, it's going to cost you more and more money. For businesses to continue operating, costs are going to go up. And your revenue margins are going to shrink. Your profit margins are going to be non-existent. 2/3 of adults say finances haven't improved since the election. Yeah, I believe it. Although a lot of people are driving around new cars these days, but I guarantee you they're all leased. So people are renting their cars. Listen, guys, if you don't own a business, and if you're not rich, you should never lease a car. You have to pay full coverage insurance. The lease is like hundreds of dollars a month. It might be cheap, but after 2 years, you have nothing. You have absolutely nothing. And you paid out like what? enough money to buy a used car that would probably last you the next 5 to 8 years if you take care of it. Also, people lease cars because they don't know how to fix cars anymore. I know how to fix cars. In my lifetime, you know how I saved thousands and thousands of dollars. I always fixed my own cars. Never in my life I took my car to an oil change. I did my own brakes, did everything, and I always bought a used car. As soon as you drive it off the lot, you lose like thousands of dollars, thousands. And you find good bargains and deals from private sellers. Obviously, you have to save money to do this, but they never taught anyone to save money, right? And everyone's in all this debt and student loan, and they can't save money. How did I get out of my student loan debt? I served in the military for 8 years. So I mean, you got to do what you got to do. And then yeah, I always fixed my cars. I bought used cars, got really good deals, and I just saved thousands. I didn't even just fix my cars. I actually dumped thousands of dollars into my cars to make them go fast, turbos, body kits, and did all kinds of fun stuff. Exhaust. I've got that Supra engine in one of my toy cars, one of my projects. Household income. It's getting sucked up because inflation's running higher and bills are going higher. It costs more. If you have kids these days, like if they play sports or do any extracurricular activities, it costs thousands of dollars these days. Well, how does that even make sense? If the schools are getting more and more money every freaking year because of unions, shouldn't all that money take care of it, right? You have to pay attention to the little things. You're getting nickel and dimed on everything these days. More bad economic numbers put huge dent in economic optimist case. Yeah, so the FOMO MSM makes everyone think and believe that everything's just going to keep going like this forever. Optimism. I do not understand how people are still optimistic. I I don't know. I I really don't. But then again, people think eating grass and bugs is a smart idea. Like I said, I don't want to get into it, but most of human history, humans ate meat. Your brain needs the fatty acids so you can think properly. That probably has a lot to do with it. And it builds testosterone and regulates your hormonal levels in your body. Meat does, the fatty acids from it. And it also causes weight loss. And I know I'm gonna get thumbs down in comments, and great, because I could ban you guys for life. 'Cause those people, they get triggered because again they're not getting their fatty acids. Can't think right? Your testosterone's dropping. You're all emotional. All right, the market soars as corporate profits slump. Yeah, like I said, I mean corporate profits are falling, but the stock market's going higher. It makes perfect sense, right? So the melt up phase is happening, and I've warned about this. And it's happening because of the Fed, no other reason. And probably a lot of capital did come out of Asian markets, especially Hong Kong now. And they're probably making their way into the US markets, including Europe. So that's what's pushing it up, and the Fed. Now, this is going to probably create a blow off top at some point. It's actually better if the market falls now and then they could get it back up to make new all-time highs again. And then it has a massive, because then it'll gain some pressure because it'll consolidate. And then let me show you guys on here's S&P daily chart. As you can see, we just hit new all-time highs. It's on the 6 count on the daily. The 9 count will signal a sell-off. So 3 more days of possible upside, which makes perfect sense. So next week, by Wednesday or Thursday, a pullback. And if the pullback falls below its the previous all-time high, then the Fed might panic. Or it'll be based off of some news or something. So S&P falls below 3,000. after next week and the weeks after that, then we could get a huge sell-off, which would actually be better for the blow-off top scenario looking forward into 2020. Let me explain. I'm just theorizing. I'm not saying this is definitely going to happen. But if I was them, right, I wouldn't mind if the market, goes a little higher, then falls, might trade a little bit sideways for some time, pulls back in a big way, and then the Fed finally capitulates in a big way. Zero interest rates, right? ZERP or NERP. ZERPA NERPA. And then the Fed could get the market to go back up, make new all-time highs again, and it goes straight up, and we finally get that huge blow-off top. I think this is the best case scenario. And this is what they probably want, and this is what Trump wants, because then this will save the market until the end of 2020 so he could possibly get reelected. If the market does crash, though, before then, I think he's not going to get reelected. And then bon appetit at the zoo, right? Some exotic meats. Oh, wait, I'm sorry. A lot of you guys don't. All right. Well, a lot of you guys could, just go out in your backyard and start, make some sandwiches with some leaves and grass. You'll do great. All right. So, yeah. I mean, this is what I think is going to happen. Will this happen? I don't know. Now, if the market goes straight up, let's take a look at the weekly chart, see what that's telling us. So the weekly's on a 2 count. So I guess if we get another 9 count to the upside on the weekly, I mean, that'll be a very big run up. That could take us, I don't know. But if we get a 3 count, so if the market goes up, right, for the next week, if it just keeps going up higher, higher, and the week after that, we'll get a 9 count to the upside. Might get to, I bet we would get to 3,330 on S&P 500, and then a big pullback. But as of right now, oscillators are, well, the MACD's crossing to the upside on the weekly, so momentum's already somewhat high. So's the RSI, so I don't think we're gonna do a straight shot to like 3,300. I think we'll get a pullback next week, and then we'll see how deep that pullback is, and then it'll go even higher, make new all-time highs, or yeah, and then we'll get that blow off top. So it's either this or this straight up. Now, if it's doing this, we're not going to see a pullback in gold and silver. Like, gold's going to go into the 2000s and take out its previous all-time highs. Let me tell you this. If gold actually breaks its previous all-time high, those stocks are going to the stratosphere. And maybe by the end of this year, that might happen. And if that happens by the end of this year, I mean, that's crazy. That means for the guys in the private group and the people who bought the report, by the end of this year, you're going to have the greatest Christmas and New Year's. And then hopefully, like, I personally don't want that to happen. I actually want another pullback. Let's take a look at gold. I would actually want gold, and this is the weekly chart, to, rally up to 1,600, 1,680, something like that, and then have a huge correction. Preferably with the stock market, right? So in the next few weeks or something. So gold will rally in a really big way next week, let's hope. And that's what I'm thinking it'll do. And then it'll pull back with the S&P and the rest of the stock market in a really big way. So like this. But listen, guys, I wasn't really looking at the charts, so I'm just gonna, I'll do a pre-market Sunday night. But, you know, 6 count. So next week, let's say the market takes a really big dump and falls below 3,000. Hopefully that'll happen, and metals hopefully will do the same with it. No, not next week. Initially, I want gold to rise as the market sells off, and then eventually gold will fall as well. But I want it to really rally hard when the market sells off next week, towards the end of next week, and then gold and silver will have a huge correction. But first, I want to see the sucker really take off for the next few weeks, up to 1680. There's a major resistance up around 1680, and the mining stocks will definitely take off. And then for another buying opportunity, this is what I'm hoping. You know, it rallies, continues all the way up here, or at least near it, and then a huge correction, at least back down to 1500 or near it, a little bit above it. And then I could accumulate one last time, and then higher she'll go. That's the best case scenario for me and everyone in the private group, because we're already profiting, right? So we want a major run up, and then we'll take profits up in here, and then we'll accumulate again. Now the other scenario is, of course, if the blow off top, if the markets keep rallying towards the end of the year, I mean, and that's because the Fed is really like going to zero interest rates, and they're actually doing some sort of emergency QE, like something happens, right? And then metals just go and test all-time highs practically, you know. I don't want that to happen, because although even if that happens, we might get a huge correction. I just don't know. We'll see. See, that's the thing with metals, because they're so undervalued, you don't know if there will be a decent correction again. It might just keep going and going. So you want to have both positions. You want cash, you want long positions, holding long for the next 3 years, something like that. And you also want to hedge when you do see a major correction coming. But, you know, as of right now on the weekly, gold is oversold, and it hasn't even crossed back up to the upside, the MACD or anything like that. And the RSI is extremely over extended to the downside. So I do expect this to possibly rally, take out previous highs for this year, and go to like 1600, 1680, somewhere up there. Nothing's changed really from my last video and the video prior to that. I'm just, you know, you have to have patience with this. That's all it is. Silver went back above 18 bucks. That's really bullish, guys. I do expect silver to go above 20 bucks, and it's really going to start running, because it hasn't had a run like gold had. It did actually for a few weeks, but you know, it's looking good. So that's pretty much for now. I mean, Sunday I'll give you guys more of a detailed TA and update and what to expect for this coming you know, week. All right, guys. Until next time, smash them likes, visit my website, 15% off. Leave anything in the comments section, and join the free chat groups, join the private group, share my videos. It's the only way my channel grows, and I'll continue to do this. Until next time.